Cacao probably will not be fully restored until April of this year. So I would expect some correction in the jump in prices that we're seeing at the present time.
All right, just very quickly, do you think that OPEC will be able to hold the line on its members for production quotas?
Present indications are fairly good. The OPEC Secretary General Subroto says that OPEC production in January so far is below quota. But if the past is any indication, there will be an erosion of discipline.
All right, well, we'll have to see. To cut you off here, but we'll see what happens.
Okay.
Thanks very much for being with us, George Friesen from Dean Witter Reynolds. And coming up, a look at the cable television industry, where it's working and where it's not.
Now, $5,000 can be leveraged to over $100,000 with no margin calls when purchasing options. Learn how $5,000 can be leveraged to over $100,000 with exchange-traded options on futures from First National Trading Corporation. Call 1-800-551-5200 and discover the opportunities and risks in stock indexes, T-bonds, gold, foreign currencies, and other options. Learn how you may profit from rising or falling markets. Call First National Trading at 1-800-551-5200 and learn about the dynamics of powerful leverage, predetermined risk, and unlimited profit potential. Call now and receive your free trading kit. Discover options on futures, one of the most comprehensive risk management tools ever developed. Call 551-5200 now for the First National Trading Corporation regional office nearest you.
They've launched it.
That's impossible.
Today's Wall Street Journal's second section.
I can't believe they beat us to market.
In today's business battles, you need the latest intelligence. First thing every business morning.
Wait a minute, we've got the edge in distribution.
Think we still have time to move?
Maybe.
You need today's Wall Street Journal. Now in 3 time-saving sections, including a new marketplace
Hey,
section.
let's get a quick read from our people in the field.
At least now we know what we're up against.
Get the information you need to make intelligent business decisions. Not twice a month, not once a week, but every business day.
Call 800-628-2300 for this special journal introductory offer. 12 weeks for just $29.75 with a money-back guarantee. 12 weeks, $29.75. Call 800-628-2300 now for the Wall Street Journal.
Fox, join Claire Carter and me as we take a behind-the-scenes look at the business of show business.
Welcome back. Here's a quick recap of our top business story. James Baker takes his first step towards confirmation as Secretary of State, appearing before the Senate Foreign Relations Committee. Business inventories rise a strong 0.4% in November. New incentives are rolled out by some U.S. auto manufacturers. And former Attorney General Edwin Meese is the subject of a scathing report issued by the Justice Department today. Now for the latest in the credit markets, Ed Hart is standing by in Los Angeles. Ed? Excuse me, we have a cable TV piece here. With the stock market showing last weekend, the cable television industry celebrated its achievements with presentations of the ACE Awards, the cable version of the Emmys. But has cable become what it originally promised, an alternative to broadcast television? Bob Windsor reports.
I'm standing in front of Capital City's ABC on New York's 6th Avenue, part of what New Yorkers call Broadcast Row. Less than a block away, CBS. Further down, NBC. 10 years ago, these broadcasting giants owned the airwaves and most of the programming. But in the last 10 years, cable television has grown. Early cable systems sold improved reception, free of interference. The growth of pay cable, offering feature films and programs free of commercials, led to the creation of cable channels, new networks, and more viewing options.
When 70% of the country's cable subscribers can receive 35 or more channels, there's a lot of diversity that's being provided, and at less than $1 a day, you're getting a great value with cable television.
Cable penetration has tripled in the last 8 years. The cable marketplace recorded a 34% revenue growth rate in 1987, the highest in the communications industry.
The networks, simply put, Bob, used to deliver most of our television to most of us most of the time. And now that's been so dramatically fragmented that on a good night, the 3 networks combine barely deliver most television to most of us.
But cable installations will reach a saturation point before the end of the century. The number of subscribers would level off, along with revenues for local cable systems. Those projections alone are beginning to spark program concern and new competition among the cable networks for viewers and dollars.
The specific networks have a lot of growth potential, CNN, FNN, because they appeal to a certain segment of the audience. But one of the things that's going to happen, it's got to get better. It can't look like minor league television. So what you're going to have to do is you're going to have to look, sound, and be better, be more compelling.
I think entertainment is going to be finite. I think information is virtually unlimited. And I think we have a generation, too, that have grown up on television, the second of which has grown up on television and computers, and more television and cable television provides what used to come into the home via print.
Bob Windsor, Financial News Network, New York.
Ed Hart is here for Real Now with the latest in the credit markets from Los Angeles. Ed?
That was kind of a bumpy day in the credit market anyhow, Prue. It's difficult enough to establish a trend on a day when the markets are awaiting important news, but conflicting influences made it even harder to trade today in the interest rate crowd. Besides the trade numbers scheduled before tomorrow's opening, there is also industrial production and capacity utilization. Today, soaring oil prices dampened sentiment until crude came off its highs. The business inventory number was mixed, could be signaling a slowdown in the overall pace of business activity, but traditionally this number is not much of a market mover. Players watched apprehensively as Eurodollar futures went higher in rate and lower in price, signaling concern over short-term rates worldwide. Depending in part on the currency market's response to the trade number tomorrow, feeling is a Bundesbank could hike West German rates a bit on Thursday, and Swiss rates could also be nudged a little higher. So the bond futures couldn't go anywhere, although they did recapture much of yesterday's loss. Up 6/30 seconds at 90 and 12/30 seconds after being turned back just above 90.5. The cash bond at 101 and 1, down 5 ticks and yielding 8.887. Fed funds at 9 1/4. It's thought to be artificially high. At today's T-bill auction, 3 months at 8.30, down 6 basis points from the previous auction to yield 8.60. 6 months at 8.35, down 13 basis points from the previous auction, yielding 8.84. Fannie Mae at another all-time high, up 2 1/8 at 57 1/4, while Cal Fed lost 5/8 at 22 3/8. Southern New England TEL down 1 at 55 1/4. Citicorp, after a new high yesterday, came out with earnings today that the crowd found disappointing. It was down 1 1/8 at 26 1/2. Primerica down 3/8 at 21 7/8, which is only 1 3/8 above its year low. American International Group down 3/8 at 69 3/4. In other movement, California Real Estate Investment Trust down 1/2 at 4 3/8. First Interstate up 1/2 at 45 3/8. That's credit for today.
Winning in today's volatile financial world means making the right call with smart investment solutions. Call 1-900-909-STOCK and let nationally respected Wall Street analyst Michael Polinoff give you his up-to-the-minute assessment of vital clues that can solve the mysteries of today's financial markets. Throughout the day, his investment solutions hotline tracks stocks, bonds, currencies, commodities, and important late-breaking news. Call now and receive a free copy of the Investment Solutions newsletter. That's 1-900-909-STOCK. $2 for the first minute and 45 cents each additional minute for the right investment solutions.
Next time you rent a car anywhere in the world, be sure to use Gold MasterCard, and you'll automatically be protected with Master Rental. Should anything happen to the car or to you or your family, we'll take care of it. Arrange repairs and handle payments. All you do is make one easy phone call anytime. That's simpler and better than American Express. Master Rental. One more reason we're the world's #1 gold card. Gold MasterCard.
Welcome to the world of London Trading Group. One of America's premier rare coin dealers want to introduce you to the highly lucrative U.S. rare coin market. We specialize in those very hard-to-find rare coins, which have the greatest profit potential. To allow you to test this market with complete confidence, we will match the amount of your first acquisition with the equivalent face value amount of a U.S. government bond as a gift. With this type of financial strategy, the bond works with a long-term capital appreciation, while the coins are enjoying both a short and long-term market approach. Call 1-800-66-COINS. It's a unique strategy that's certain to hit a financial home run. Act now. Don't hesitate. 1-800-66-COINS. An undetermined number of bonds are going to be allotted as gifts. So call right now, 1-800-66-COINS, to take advantage of this once-in-a-lifetime opportunity.
With the stock market showing no certain direction so far this year, what are analysts predicting for the next 11 months? With us this afternoon is Robert Farrell from Merrill Lynch. Bob, what's the Dow going to do this year according to your crystal ball?
Well, let's put it on the crystal ball basis. I think that basically there is a positive bias for now, because last year ended with so much low expectation. People are selling stocks all during '88. So I think the technical undertone of the market is still good. I'd say we could see, at least in the first half of the year, I think we're going to see a better market, a continuation of the rise that started in December of 1987. Now, that may take the Dow to 2,400, or it may take it a little more than that. The second half of the year, I'd have some reservation.
That sounds like a fairly healthy level. What about interest rates and the budget battle that's shaping up? Will that keep the market down?
Well, that's what everyone is focusing on, of course. All the models show that rising rates and a inverted yield curve is not good for the market. Yet we have had rising rates for the past year. The market has gone up. We haven't yet determined what level of rates is going to stop the economy, and therefore I don't think we've really indicated what's going to stop the stock market. I think it's going to be more of the same. We call this kind of a transition market. It moves up till it gets overbought, then comes off to a correction for a while, and moves up again. So I'm trying to follow a strategy of buying the stocks that I like during periods of weakness.
Now, what about some stock picks here? Any particular industry sectors that you're looking forward to?
It's been a difficult market to really differentiate theme and leadership, because most markets have a theme that's common to them. But I keep going back to my long-term themes, which is an industrial theme. I think the companies that have been through a major restructuring, where there's already been a cutback and downsizing, and where they've learned to survive in tough times, are the ones that are going to do better. So that has machinery companies, capital goods areas. I think even some of the energy companies are going to do better this year. And I also think that there will be a premium on growth earnings. So the better growth areas, like, say, the environmental stocks, I think will do well.
Okay. Now, you said you were just in Europe recently. What's your prediction for the dollar for this year?
Well, the dollar, I think, is the real hook here. I think the dollar has made a bottom. I think the dollar is going to do better than most of the forecasts that you hear from the economists. And if the dollar does do better, then we don't have as much pressure to have high rates or high interest rates. So I think that also may later on redirect some foreign money here.
All right, Robert Farrell from Merrill Lynch, thanks for being here with us today. In today's management report, Larry Rubiniak explains how good leaders can turn contention into consensus.
An important role of leadership in the strategic management process is the generation of agreement. Turning disagreement into agreement is an overlooked skill in a manager's bag of tricks. Consider just two interdependent and important aspects of the planning process: setting goals and determining a strategy for their achievement. Goal consensus suggests unity of effort and a consistent direction for the company. Disagreement on goals suggests divisiveness and political maneuvering. At best, disagreement results in compromise. This often results in suboptimization, as the parties in conflict must give up something to get something in return. So too with strategy. Disagreement on strategy suggests an inconsistent market thrust. Disagreement may also suggest a lack of cause-effect clarity in terms of what the strategy can accomplish. Simply, disagreement occurs because it is not clear to all that doing A will result in B. If A affects B, and B is good for the company, agreement on strategy is usually easier to attain. What can one do to generate agreement? Focus on disagreement as an opportunity to analyze data and learn. Develop processes for conflict resolution. Confront conflict, don't avoid it. Concentrate on measuring the value added of strategies. Choice of strategy should reflect measurable results and not just political gamesmanship. I'm Larry Rubiniak.
The Management Report is brought to you by Norfolk Southern, the thoroughbred of transportation.
Now for the full report on today's currency and commodity markets, Diana Karicki joins us from Los Angeles. Diana?
Prue, the currency and financial futures markets were in a holding pattern today. They're waiting for a signal from the Commerce Department to get some direction, that coming tomorrow in the form of November trade data. The consensus estimate is for a deficit of about $11.5 billion, up from $10.3 in October. The dollar did weaken a bit today going into the trade data, but most experts see the greenback as strong near term. They're betting on President-elect George Bush and the possibility he'll take action soon on the budget deficit. A deficit substantially smaller than $11.5 billion in November could trigger another steep rise tomorrow in the greenback. Like the rallies we saw last week, that might be met by yet another round of concerted central bank intervention. Currency futures settled higher on the dollar's pullback. Deutschmarks are getting some support from speculation bond will hike interest rates on Thursday. Traders in the British pound are gearing up for indicators out of London later this week. Most important are unemployment and consumer price data due Thursday and Friday. Debt futures were also somewhat sluggish going into the November trade report. The short end of the market was pressured by a still high federal funds rate, which hovered around 9.25%. A small customary purchase agreement failed to lower Fed funds substantially. Silver held above contract lows scored Monday, but traders note volume was quite thin. Gold continues to attract good physical demand around the $400 level. But copper was not to be outdone this Tuesday, recuperating from a nearly 300-point deficit to end with an advance. Contract highs were scored in March through July, the next hurdle 150 cents in March. Supply tightness is supporting copper prices. There are huge production disruptions at an important Chilean smelter and the possibility of a Peruvian strike. The energy market also saw contract highs set today in February and March crude, but prices came well off their highs near the close, apparently on some skittishness going into today's statistics from the American Petroleum Institute. As of 5:45 p.m. Eastern Time, that data is not yet available. Among the agricultural commodities, corn and soybeans continued Monday's liquidation, which led to limit-down closes in both complexes. The losses were sparked by the 1988 USDA crop report out Friday, detailing less damage from the drought than was thought earlier. But wheat has performed well, partly on ideas the winter wheat crop is sustaining serious weather damage. Good export news is also bullish, like today's word that a Soviet wheat bid has been accepted. Coffee continued Monday's move higher. Part of the buying is a technical correction to the recent steep sell-off, and part is a reaction to Brazil's austerity program, which might lead to a strike or some coffee stockpiling. Finally, March cocoa edged closer to the $1,300 level. March gave up early gains at midday, perhaps reacting to lower prices in London. UK cocoa dealers are worried their industry will suffer more cutbacks because of the recent Ivory Coast sale to a French trade house. We'll have the other settled prices later. Now back to Prue Sowers in New York.
Thanks, Diana. The merchandise trade deficit numbers for November will be released tomorrow. And in our studio today is Carl Weinberg from High Frequency Economics. Carl, what's your projection on the deficit? Up, down, sideways, which?
Well, our forecast is a little bit lower than the market forecast. We're looking for a $9.9 billion deficit. Of course, on any given day, any given number could come up, but the broad trends we're looking for are a continued 25 to 30% increase in exports year over year, a continued 10% or less increase in imports, and that should give us, according to our calculations, a better number than last month and about a $3.5 billion improvement from last year.
Well, what forces are pushing this deficit down?
Well, what we have in the what we've seen is we've seen a big adjustment in relative prices that's come about by the exchange rate. And the depreciation of the dollar since March of 1985 has made exports a lot more competitive, and that's given us our 30% export boost. Also, import prices are a lot higher now, so we're buying less of them.
What about long term? Do you see the deficit continuing to go down, or will it go down and spike back up?
Well, long term, everything really depends on the federal deficit. I mean, we call it the twin deficit problems because the U.S. government absorbs and then we have to borrow overseas. I think the Bush team has an opportunity now to bring down the federal deficit. If that works, I think we could see a long-term trend improvement in the trade number. But we can't have one without the other.
Now, what about the market reaction tomorrow? What do you think will happen first in the stock market?
Well, it's a little bit like Las Vegas out there on a trade day. Basically, any given number can come up. Our standard error forecast on these numbers is somewhere around $800 million each month, and our particular record is better than most. Broadly speaking, markets are going to look at the consensus. If the number turns out to be better than consensus, they'll buy dollars, the bond market will rally, the stock market will rally. If it's worse than consensus, the opposite will happen. It's really just a throw of the dice.
Well, we'll take a look tomorrow. Carl Weinberg, thanks for being here with us today.
Thank you.
It's great to sit back and let your accountant do your taxes, but as Tyler Matheson of Money Magazine explains, you better prepare the groundwork pretty well.
To get the most from your tax preparer this year, resolve right now to keep up your end of the bargain. Here's a rundown of what you owe your tax pro. First and foremost, be honest about all your finances. Don't fudge your income, period. Next, make sure your records are complete and well organized. You'll save your preparer time and yourself money. Keep income statements in one file folder and organize deductions by categories in others. Third, be absolutely clear about how aggressive you want to be. Are you a Rambo on write-offs or a Mr. Rogers? Spell it out early. Fourth, read your return carefully. Watch especially to see whether your preparer's interpretation of your records is accurate. Last, consult with your tax pro before you make a major financial decision, such as buying or selling a house or setting up a child's college education fund. Remember, getting the most out of a tax preparer is a two-sided coin, but one that should wind up in your pocket. I'm Tyler Matheson of Money Magazine.